Today's topic in this 3-part series is really devoted to the numbers. And so if you're someone who struggles with having security in your numbers and being confident in your numbers in your business, you're definitely going to want to keep watching. Let's jump right in. Today's tip in order to build a more organized sweet business is to get an accounting system. My background is in accounting and finance, so it's no surprise that the accountant tells you that you should get an accounting system. To me, one of the things that kind of identifies someone between having a hobby business and having a real business is whether they have some type of reporting system or accounting system. Now, let's just be honest. You don't have to, invest in a Quickbooks or a CakeBoss Cloud or even a Crafty Base or any other type of software in order to keep track of your expenses as well as your income, but you need to do something. I know a lot of people who will just look at what's in their Square account or what's coming through their PayPal account or maybe their Stripe or Venmo, and they're like, oh, I'm doing great in my business because all this money is coming in. Well, guess what? At the end of the day, that's not the entire part of the equation. That actually doesn't indicate how healthy your business is. The revenue side is really just the one half of the equation. The other half of the equation is how much money you're spending. And so if you're not tracking your expenses through an accounting system or through like using Excel or even using just paper and pen, then you won't know how healthy financially your business is. And why is that important? Well, that's important because later down the road, you may not want to be in your home anymore. Later down the road, you may want to get a studio, or maybe you already have a studio and you want to get into a bakery or a storefront bakery, or maybe you want to develop into having a food truck. And when that stuff comes down the road, you need to be able to make the decision as to whether you can afford to or not. And that's one thing I really want you guys to understand, that the accounting system and accounting software and reports that you get out of all of that, it's really about helping you make decisions in your business. So you have to know how much money is coming in on a regular basis and how much money you're spending on a regular basis. Again, if you've been in our pricing class, and you already know how important it is to understand your cost. So understanding your cost isn't just important with pricing your menu items. It goes even beyond that. If you understand the cost of running your business, then you will understand how much more money you will need to make in your business in order to turn a profit. Okay. Now, at the end of the day, the way that you're going to know how much money you're spending is if you use an accounting software or you somehow keep track of it manually, pen and paper, or an Excel spreadsheet. Here is a really easy tip especially if you are, not ready to spend, a couple dollars on, QuickBooks, or if you're not ready to, if you're not really good at math and you don't really want to keep stuff pen and paper. Here is one really quick tip. Get a credit card or a debit card or some type of bank account, some type of account that you only use for your business expenses. So if you're like, Sid, I don't really feel like it. I don't really feel like, getting accounting software or maybe updating it on a monthly basis. Cool. I understand. It could be something that's not in your wheelhouse and you're just like not ready to mentally do all of that work. One thing that you can do is get one account, credit card, bank account, something that you only use for your business. And I'm going to tell you why. Because then at the end of the day, all you'd have to do is look at what's coming into your PayPal and what's going out of that business account. And then you can at least do a high level overview. It may not show you all the details of what you're spending your money on, although you could probably narrow that down if you look through the transactions on that account. But at least you'll know this is how much money I actually made at the end of the day. I brought in this much through PayPal. My one credit card said I spent this much this month. Revenue minus what was in that account or what I spent in that account this month, and boom, there I go with my profit. quick, down and dirty, really easy. All right. I wouldn't recommend doing that for the rest of your business career, because at the end of the day, if you ever want to get a loan, or if you ever want investors to invest in you, or if you ever want to make any other really big business decisions, then you won't actually have the details down into it. But at the end of the day, when it comes to something really quick and simple to do, that is one really simple way to do it. Just get one credit card or one bank account, use that for the business expenses only, and then do your revenue, which is the money that you get in through PayPal or Square, all of your income basically, and subtract out your expenses. Another reason why keeping your expenses separate from your business expenses, separate from your personal expenses, is because there's a certain thing called liability. All right. And so heaven forbid something ever happened to you in your business. I know a lot of us talk about having an LLC, and usually when you form an LLC, then you form a limited liability company. And that basically means that if someone were to come after your business, then they would only be able to come after what is owned by your business. So they wouldn't be able to come after your home. They wouldn't be able to come after your personal income. They would only be able to come after what was actually owned by the LLC. Now, if you don't separate out your business expenses and your personal expenses, you actually can void out that protection from your LLC. Let me repeat that. If you mix your money, if you mix your personal money, your personal expenses, and your business expenses, and someone comes after you for some reason, and they try to sue you, even if you have an LLC, your personal expenses, your personal income, your personal assets will not actually be protected by that LLC anymore, because a judge will say, well, you haven't been splitting up your personal and your business. You've actually been doing them both together. So they're actually both at risk. All right. So again, there's so many reasons as to why you should operate your business kind of like in an organized, in an order manner, especially when it comes to the accounting, because it's not just about the protection of your business. It could be about the protection of your personal assets and income as well. So another piece that is going to help you when you have an accounting system is because Uncle Sam, if you don't know who Uncle Sam is, that's the government, wants his money. Okay, the government wants its share of your money. Your accounting system is going to help you understand how much you actually owe to the government. All right, so if you use a system such as like Quickbooks or something like that, then they will actually help you estimate how much you should pay in advance, so that when the end of the year comes and you get ready to pay your taxes, then you don't have to pay a whole bunch of money at one time. Now, a lot of you may be new in business and maybe you don't owe any taxes because you haven't made any income in your business just yet, but there is going to be a point, and I believe this for you, there's going to be a turning point in your business in which you're actually going to start making some money, and then you are going to actually start owing some stuff to the government. And so before that starts to happen, then get into the practice of going ahead and paying that estimated taxes to the government, so that you will be free and clear, and then everything will be fine and okay, and the government won't be coming after you. All right. The other thing that's going to be great about using something like a QuickBooks, or maybe a CakeBoss Cloud or a Crafty Base, is that you actually have the opportunity to keep your receipts and connect your receipts to those transactions. Now, heaven forbid you're ever actually audited from the IRS. There may be a time when they will ask you to basically verify an expense. And in order to verify an expense, they're going to need your receipt. The receipt from Walmart or from Hobby Lobby or from KitchenAid, wherever it is you bought your equipment from. And those receipts you can actually connect. Inside of each of those programs. Now, some of us may have a receipt drawer. That's mine back there. May actually have a receipt drawer where you keep all these pieces of paper, or maybe it's your wallet where you keep all of your business papers stuck in. Well, you can get rid of all those papers. You can actually take a picture. QuickBooks actually has an app that you can take a picture of the receipt, and then boom, there it is. It's connected to that transaction. And so then if you ever need to access it, it's actually up in the cloud. It's online and you have access to it, and you don't have to worry about the ink faded on the receipt. And I swear this used to be, this was the right receipt. No, you don't have to worry about that because it's actually already locked in the system, and you're ready if Uncle Sam does come knock on your door and say, hey, we need to see your books. Another reason why you want to have an accounting system to keep yourself organized is because you may want investors, or you may need help from lenders at some point. Now, yes, it would be an awesome and wonderful world if all of us could operate on a cash basis and that we didn't have to ask people for financial help, but that's just not how the world works for all of us. And so at some point, you may need to ask for financial help from a lender or from an investor, and they're gonna want to see your books. Why are they going to want to see your books? Because they want to see the financial health of your business. They want to make sure that your business is running at a profitable rate. They want to make sure that you're not spending more money than you're making, and they want to see if there's growth over time. So they're going to want to see, probably if you've been in business for 4 years, they're going to want to see if you were losing money that first year. That kind of makes sense because you were brand new, but after year 3 and year 4, were you turning a profit? That's what they're going to look at. So they're going to look at the trend from your income statement, which actually is going to come from QuickBooks. And if you don't know what an income statement is, definitely join the academy, because we go through all of these terms as it relates to accounting. We go into income statement, balance sheet, and so many more terms that you need to know if you're going to be running a legitimate business and you want to be successful in your business. All right. So that's all we have for today. Thank you guys so much for joining. Make sure you check out tips 1 and 2 from the previous videos, and make sure to subscribe to this channel, and also click that little bell so you can get the notifications of when we have more videos out. Also, make sure to check out the links below. We've got a lot of other free resources that are out there and available to you. We've got free classes, we've got free groups, and they're all there for you to help you understand how to build a successful sweets and baking business. You guys are awesome and wonderful and beautiful, and I can't wait to see all the great success that you have in your baking business. See you guys later.